So, hi everyone. I've just had an hour-long conversation with Matthew about many topics, including two companies, Seritage and Daily Journal Corporation, which we'll probably get to at the end. And I just wanted to ask Matthew some questions about his business because I think they're really interesting, and I think that there's a lot to learn for me and for other people. And so, Matthew, one of the first times that I met you, you showed me your annual budget, personal and business budget, written down on a square piece of paper, and you kept to it religiously. Can you just talk about that period in your life and how you managed yourself and what was going on?
Guy, that is such an interesting question.
I feel bad. You look away. It's kind of like you don't want to answer that.
It's like, oh boy, so we're going to really go deep here.
Is it a painful place?
No, it was a strategy that ultimately was successful, but it was incredibly necessary. Look, Guy, I don't think it's a surprise to most people that when you start a fund, some people come from enormous wealth to start a fund. People come from all sorts of places, but I had a job on Wall Street and I saved as much as I could for almost a decade. And it was an incredible role that I played, consulting for Goldman. And when I left, I had a few $100,000 saved. And that was my runway. That was my budget. I had a young family, new wife, and we moved to California. So I was extremely careful about what we are spending, and we had to launch a firm. And it's, you spend maybe 50,000+ if you launch it on a hairstring kind of budget. And then I wanted to invest in the fund myself. So I invested the first 100,000. Someone else put in 25,000. So we launched, over 10 years ago with 125,000. And I sort of had maybe 200 or 250,000 that I had to make last. And some of that was even in a retirement account that I did not want to touch, and I never had to touch. So yeah, we were very strict. And one way that I made it clear to myself is I put a little laminated, budget in my wallet, and I sort of stuck to it. And there weren't a lot of luxuries. And I think we were in about year 4, and we maybe had 5 million under management. And we were probably talking about something that made me feel like, Guy, I should actually show you what's really going on, because although I want to do all of these amazing steps, it's not quite possible yet. So that was a very interesting time. And we managed.
And I think that the reason why I ask you about that, and I think that one of the reasons why you are inspiring to me, is that you are a prime example of somebody who's willing to make himself vulnerable. So you've run your business, you are willing to put yourself in a financially vulnerable situation, and you kind of, in all sorts of ways, wear your heart on your sleeve, not just with your friends, but with life. You're not afraid of exposing that vulnerability, letting people know, kind of like, you've been perhaps less so now than ever in your life. And in fact, now maybe you're not on the bleeding edge anymore, but you've lived a good 5 to 7 years on the bleeding edge of starting your business, and you're willing to stick with it. And so I guess, 2 follow-up questions to that is, what made you courageous enough to be vulnerable in that way? And also, what made you willing to stick with this program? So I think that, and I think that it's okay to ask this as part of the question. Many people faced with the same set of circumstances that you were faced with, in spite of having the ambition of building a successful fund, would just say, I can't do it. And they would close it down, they'd go get a job, they'd go do something else. What distinguishes you from those people? What made you able to do that?
It's a great question. I'm not sure that I have a perfect answer, but it could be that I was naive, but for some reason, since I was very young, I really wanted to run a fund. And so I studied economics and math, and there's always, I think, hurdles, and I think I find it. I enjoy solving problems and getting over hurdles. I just don't want them to get in my way. I mean, I think it's like you can fail at doing what you don't want to do. So why not just do what you want to do? And then if you fail, then you just go back to doing what you didn't want to do in the first place. So who really cares? I had a successful career out on Wall Street. I could always go back. That wasn't what I wanted to do, but there was a plan B. And so, I was kind of going to give it my best shot. And, a lot of the things, I mean, you taught me a lot, Guy, as you know, but around year 5 or 6, I think I told you, hey, I really want to write these annual reports like you do. And you said, well, then you just have to do it. I said, well, I have such a small fund. Who would read them? But you convinced me. So I just started doing it. And you gave me this recipe. I said, well, if I at least don't do the recipe, then I'm not giving it a fair shot. So, I don't know what differentiates me necessarily, but I really was passionate about what I wanted to do. I knew what I wanted to do. I think that's a luxury, to know what you want to do. And so I wasn't going to give up because I ran out of money. And I never quite ran out of money, but we were very close.
You know what comes up for me, Matthew, is that what came up for me when I had the opportunity to interview or have a public conversation with F.W. de Klerk, the former and recently passed away president of South Africa, who led South Africa out of apartheid. And he in a certain way, you kind of, you gave for me a non-answer, which is also an answer. In other words, you didn't come up with some formula or some set of tricks. It's just inside your personality. And with F.W. de Klerk, when I tried to understand what made him capable of doing the extraordinary things that he did to lead South Africa outside of apartheid, he kind of, in a certain way, didn't understand himself. He gave a non-answer and I think that where I come out at so both you and F.W. de Klerk have been capable of making yourselves vulnerable and putting yourselves in a position where you may not succeed, but you do it anyway. I think that my theory is that probably from one or both of your parents or from somebody else, you at the end of the day go to bed each night knowing that you are deeply loved and knowing, mm-hmm. and you've made friends with yourself. You're not at war with yourself. And yeah, that's where it comes down to. I don't know if you want to comment on that.
Well, I appreciate the comparison, first of all, so I'll start with that. I absolutely, look, I think having a strong upbringing and loving family is extremely important. Even Buffett will talk about those types of things, how fortunate we are, where we come from. Look, I don't know how to respond exactly. I do think that having a great support network is incredibly valuable. And certainly I do have that, and it's helpful. And yeah, what can I say? I think
you don't have to say anything, Matthew, and no problem. And you should know that I have enormous respect for you for that. And I think that one of the things that I benefit from having you in my life is that you make me more courageous to be vulnerable myself. But moving on to another set of more practical questions, and they're not many, Matthew, before we get on to Seritage and Daily Journal. So there was a point not that long ago where I remember you saying to me privately that you were not sure how long you could last like this. And suddenly it turned around, and it turned around because in a certain way, it felt like you knew that it was now or never. And I think that you did some things that I could learn from and have not yet learned from. And it had to do with the way you followed up with people who expressed interest. And so, what I've got written down here is the question, may I assume that you're not interested in investing in my fund? And perhaps you can tell me about how you learned to do follow-up with people who were qualified to invest with you, who ought to have invested with you. And it seems to me that you suddenly got a far greater success rate in attracting new investors.
Yeah, it's a really interesting situation. In fact, I had a incredible conversation and lunch with Arnold Vandenberg recently, and we were talking about this topic, and he was so excited because he thinks the shift was actually just in my subconscious mind, and so that's just an interesting observation that he had. He's of course very wise and wonderful human. But what I thought I did was a whole bunch of practical maneuvers, because I got to a point, and I will, really when I felt this was during the pandemic, very early in the pandemic, when markets were going down, and we have a similar fee structure to yours. So we don't get paid unless we are above high water marks and hurdle rates, and we earn a sliver of the performance. So to be kind of stuck in a financial trough, and then realized the fund's down, we were down at one point over 25%. I think the markets were down 30, Dow went down 37% or so. But then you've got to climb out of that hole. And that can take a year, two, maybe more. And that means you're not going to get paid for the next bit of time. So I actually talked to my wife quite a bit about it, about the situation we were in. And so you're asking some specific questions. I studied I had read a lot of sales books, because I realized there were people with less, I don't mean to say this in any sort of rude manner, but there are people with lesser capability, investment capability, that have far larger funds, enormous funds, but they have like a great sales team, or they themselves are charismatic individuals. And so one book that I really enjoyed was Never Split the Difference by Chris Voss. It's a very fun read, and there's a lot of great insights. And there's all the other books you would expect, like Cialdini's books and a whole bunch of others. So I read all of these, and I started kind of putting them in place, even things like Thinking Fast and Slow, and tried to come up with sort of a formula that I could use. And what I realized is, if I could create a better funnel so that people would come to me, it would work way better than me doing these one-on-one conversations, because it was extremely time intensive. And the referrals I was getting were not always great referrals. It would be, somebody's wealthy uncle who has no intention of investing in a fund, or somebody who's never invested in a fund before, doesn't even quite know what a hedge fund is. So it wasn't yielding great results. And so I fixed the funnel, or I tried to slowly start repairing the funnel. And then as people started coming to me, I was very quick to sort of let them know that I don't have the capacity to speak to everyone. And I would let the few that were very interested kind of come to the surface. And then if the conversation started to look like it was going nowhere, a really important question that I believe comes from Chris Voss's book is, can I assume you're not interested? Because it sort of puts some closure on it. And by doing that, you really get to know if somebody actually is interested, or if they're not interested. And if they're not interested, that's fine. But we don't need to dance around and waste time. And so it became much more efficient. And it was a very powerful, there's a number of things like that were very powerful.
Maybe just one more question on that front. And for the listeners' interest and viewers' interest, the way it looks like to me is that at one point not so long ago you were at $5 million, and I think you even went down to $4 million, and now you're at $18 million, and $30 million is around the corner, and before you know it, you'll be at 300. And then when you get to $1 billion, I'll buy you a bottle or even a magnum of champagne, as I've promised you to do. But tell us about your funnel. What does your funnel look like? How do people come into the funnel? What are the different stages, and where do they end up?
It's a fun thing to share. I'm not sure if it will be relevant to all of the viewers here, but maybe it is, because I think it's relevant to a lot of businesses. I mean, we're running businesses, Guy, as you know. And so it's sort of, in our business, I think the naive view that people have is sort of, if I build it, they will come. And if I put up great returns, then everybody's going to come rushing in with their money trying to invest. And it's just simply not how it works. I have many brilliant friends who run funds, and a lot of them get stuck in the $3 to $5 million range for a long time. And a lot of them end up needing to go get other jobs and doing other things, because you need to do something a little different to break out of that. And Guy, you helped me figure out what this funnel would look like. A few others helped as well, but ultimately, I needed people to self-select themselves into my ecosystem, so that by the time I was having a conversation with them, they had already figured out that they wanted to be talking to me and potentially doing business together. So I sort of broke away with one tradition, which was like, never talk about your positions because of commitment and consistency bias. And I realized, like, what I need to talk about something. So let me go out there and share a few things. And I became quite a bit more transparent. I said, look, here's what we're doing. Here's what we know. I don't care anymore. And I went on a few podcasts. So the funnel for me started, there's a number of aspects going on in terms of like sending out annual reports and things like that, and trying to create really high quality work. But the podcast was a big catalyst when I could create like a many to one environment. And then the podcast hosts, it's actually their responsibility and goal to get as many viewers as they can. So if you're on a decent podcast, and there's a number of them, but if you're on a decent podcast, you get a few thousand views. And from that, people would go to my website. I used to not know who was going to my website, but I locked a few pages so that, and all we ask for on the website, if you want to see all sorts of research, all sorts of documents, all we ask for is your name and your email address. And if people aren't willing to put in their name and email address to get 10 years of research, write-ups, a trove of information, they're probably not ever going to invest. So that's okay. And that's totally fine. It's like, we don't need to waste each other's time. It's not going to work. It's fine. So the people that do put their name in, though, they become interesting. And I know we were just talking about this. For me, I use a software called GMass. It's free. Okay. It's not it's quite useful. In fact, I'm really pleased with it, but it's a really simple thing that basically just automates a few follow-ups. So I can create some very simple logic. If somebody responds, stop the follow-ups. If somebody doesn't respond after this amount of time, send them this email. And so I set up 3 emails. And you've all seen it in social media marketing and everything else. It looks very personal, but we try to make it really valuable. So here's a link. I don't know if you've seen this podcast. If you like that podcast, you might like this podcast. If you ever want to have a conversation, let's talk. And in each one, we're asking for a conversation, and most people don't respond to the first one. We start getting a few responses to the second one. But on the third one, we say, can I assume you're not interested in the fund? And we get like 20%. So these people have totally self-selected. They've gone from listening to a financial podcast, which is already an interesting person, to then looking up our website and then proceeding to enter their data into our website. And then when we write to them, they respond, and they say they want to have a conversation. my close rate has gone from like 1% to 50 something percent. So out of the, let's say 50 people that visit and put in their information at the website, maybe I'll have a conversation with maybe 10 of them want to talk. A few of them are, we've actually set up some different pools of folks. Some people are really not able to invest in the fund. So we don't necessarily do a one-on-one call, but we do group calls to help all those people. And then, but some people are really interested. And when it comes down to the 4 or 5 conversations that I have, they've self-selected to the point that it's more like them deciding, do they want to join the $2 million class? Do they want to be in the exception class, which is 250 to 2 million? They might have a few questions, very specific questions. That's great. And we usually have one call, and they know they're either going to invest or not.
Yeah.
So that's been a major change.
Yeah, it's just really fascinating for me. I mean, many things come up from that. First of all, I think that for anyone building their business, there's a lot to learn, including myself. One is to think through that funnel and to think through how you're actually not qualifying people, but disqualifying people at different stages. Mm-hmm. This idea that when you we're the product of the internet, in that, am I using Google or is Google using me? Am I just a set of eyeballs that Google's trying to manipulate? But when we put our own content out there and when we behave in the right way, we can actually put the algorithm to our own use. And you've clearly put the algorithm with a carefully designed funnel such that those 5 people who you end up having conversations with are really worthwhile people to have conversations with. And it's just, and then, it's just fun to see that flywheeling emerging, because I'm sure there are other aspects to it that if one day you give a seminar on how to build your business, you might talk about what, because there are probably people who are not ready to invest, but in a year's time or 2 years' time are ready to invest. So you're kind of building the base of your pyramid, and you're now in a very, very different place. So it's not just the 18 million that you have today and growing, it's the enormous pool of people that you're building who are ready to invest. Maybe they weren't ready first time. In any case, thank you so much for that, Matthew. I guess, why don't you, just for fun, tell me in 3 words what you like about Seritage, and then we're going to ask you what you like about why you like Seritage. Why does Seritage make it in your portfolio? And then maybe I'll ask you why Daily Journal makes it into your portfolio. And for the listeners' interest, we just had a long conversation about both companies. And what we're going to try and do is make this content evergreen. So Matthew's not going to go into any specifics that have happened recently or not. But what is the nature of Seritage's assets that attracted you?
3 words. It's difficult to put in 3 words, but it's a deep value opportunity. And given more time, I'd come up with some maybe even different words. But the reason Seritage is it's a difficult story to understand at the moment, because it's a REIT that is repositioning and repurposing all of these legacy Sears assets, and Sears went bankrupt. So the story is very confusing, because normally a REIT would operate in a much different manner. REITs typically have all of these cash flowing properties and things, and soon they will. But right now they are, at the moment, it is a very misunderstood story. How much detail do you want me to go into, Guy? I can.
Well, I'm going to help you by answering.
Look, I'll share a couple things. They have clearly defined strategies for these properties, and they've kind of put them into 5 different buckets. One of the buckets is being liquidated, and it's a strategy, and the market's confused because they think that these sales are to like create some cash flow or something, but it's actually just recycling the capital from low return, low IRR opportunities to high IRR opportunities. And ultimately, by doing that, they're going to have a great return on equity. They're going to have a great set of final properties, and they're doing all of this densification effort that's going to increase their square footage. And it's a very interesting space to be in. I think the story is so misunderstood that the potential outcome is very asymmetric. And
Yeah.
that's the attractiveness with Seritage.
I feel compelled to, I want to answer my own question, Matthew, in a slightly different way, which is that, owning the economic high ground and owning the things that even if there's asteroid hits the earth or some terrible devastation hits the earth, is still going to be valuable. This kind of nexus of real estate all around these emerging suburbs and built around major arteries, and all these parking lots outlying it, and the inflation protection just means that you own something that's extraordinarily, that has to be extraordinarily valuable through time, and whose value is going to go through time. And there's an element to it which is not dissimilar to Berkshire's buy of Burlington Northern. Who knew exactly what the railways were going to do? But when you own a bunch of rights of way through the middle of all these emerging cities, it's got to be good in one way or another. But and then asking you the same question about Daily Journal, and what makes Daily Journal special to you? And then I guess I also have an answer, and who knows, maybe you'll hit my answer, in which case I won't say it, or maybe you don't, in which case I will say it.
Yeah, I will. Look, I think there's a lot of parallels. I'm going to also add to Seritage before I get into Daily Journal that this is it is an extraordinary position for our portfolio in particular, because we own nothing else like it. And this is they are very real estate assets. They are inflation protection. They are developing and creating all this enormous value with each of these properties. And it is a truly value creation story. It's like a Fisher compounder, but you're also getting this gram. If you dig in at the values, you're getting this gram net where you just can't believe that you're able to scoop up these properties at this price because of the market confusion. So you kind of get this combination of all these things. And then, as you said, you just own these wonderful assets. And in some cases, we don't know what is going to ultimately exist on this land, but these are strategically positioned properties for the last 50 years. They are in major intersections. There's a demographic of people that are usually very affluent. There's going to be a lot of demand for this space in the future. So you just hold it and keep it. It's wonderful. Daily Journal has a parallel characteristics, but it's very different. Look, the framework, there's a lot of frameworks that we use, but a general framework that I really try to apply is having an extraordinary business model, having an extraordinary management team, and having deep value. And if you get right in the nexus of that, it's really hard to go wrong. So Daily Journal has, it's this firm that's been run by Charlie Munger since he bought it with Rick Guerin 43 years ago. They have built up an incredible base of goodwill in all sorts of aspects. I mean, these guys have written the book on moats. There's so many moats. There's so much off financial statement value in Daily Journal that it's difficult to even quantify. There's so many characteristics of the business that give them a competitive advantage over the long run. That, again, similar to Seritage, we don't know exactly how big is this going to become? How valuable can this be? But it is certainly going to become very valuable. And I can sleep so well at night. I'm quite pleased about this. Our small, modest-sized fund now owns 0.5% of all of the Daily Journal shares. And there is no reason, you could tell me all sorts of problems and issues. I'm basically going to ignore them. I mean, people comment all the time about whether the software is going to grow this fast, or if the model shows, this return or X return or Y return. It's going in the right direction. It's run by the right people. It's an outstanding pseudo SaaS business model in a very big space, and we're getting it for an extraordinary price. So we own 0.5% of the whole firm, and we may end up we're going to own 0.5% of one of maybe a duopoly that runs the American justice system. I mean, it's just like an incredible opportunity.
You heard it from me before we made this live, but it's just so exciting to see a business that gives the client all of the development costs, and all the way up to the day where the client's software goes live is eaten by Daily Journal or by Journal Technologies. And it's just so much fun to see a company that actually lives the values of Charlie Munger, of wear a hair shirt. And it's no different to those of us who do not charge a management fee. And we just say, you know what, we're willing to wear this hair shirt. And when you make money, we make money. And if you don't make money, we don't make anything. And it's a similar idea with Daily Journal. And it's just, I would just tell you that it's awesome to have that in your ecosystem. And somehow, all you do is own the bits of paper, but it's so much more than that. I think that Daily Journal will influence your behavior and will also influence my behavior in the same way that Berkshire has. Matthew, if somebody hears this and wants to get in touch with you, how do they get in touch with you?
Well, they can enter into my funnel. So they basically would visit my website, petersonfunds.com. And by the way, there's a whole lot of stuff out there. So if people just generally want to watch things, we have a YouTube channel. They can go to our website, but petersonfunds.com. If you basically log in and put in your details, you're gonna end up connecting with me. Although it's not always right away, but we'll end up in touch. Otherwise, you can write me directly at matthew.peterson@petersonfunds.com.
Sounds good. And Twitter, other social media?
Yes, I am on Twitter. I guess we'll put the Twitter handle in the comments and things, but I am on Twitter. We're on a lot of social media. So YouTube, you can find me on LinkedIn. You can find me, on all of the standard. We're yet to really have much of a TikTok profile, but the rest of it's out there.
Yeah, sounds good. Matthew, thank you so much for joining me.
Thank you, Guy. It's a pleasure, as always. Hey, it's great to see you here. If you enjoyed that video, I'm sure you're going to love this next one we put together. We'll see you there.